General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Gotta do Friday and Saturday. So Friday was the 24th. This Tuesday low held. Tuesday low held. Note. Tuesday low has not been getting retested. It's just been leaving lately. It's just what season we in. Yes. Look like it did. No TGIF. That's what I was thinking. We'd get TGIF. Let's go here. It's interesting how we gapped above this fair value gap. And then this is that wick zone that was right around that new week opening gap. This is the first FEG from Thursday, showing up for work for the buy. But it's not a classic profile. And we already went like 3 deviations of Thursday night Asia range for next week. If you went short here, this was just like, nope, especially with the displacement. Beautiful stop line. Classic delivery. Mm, page one. It just sat on a new day, opened a gap, and rallied. It wasn't playing. Another tap and go. New day, open a gap. Okay. Nice reversal candle. This is actually kind of, because I was like, all right, this high, so this candle should hold. We still had this gap here, but well played. And what is this price point? It's not futures, it's the CFDs, but still. 27. And see how we use previous week's range. So what is this? Monday, Tuesday we tapped it. Wednesday closed above it. Thursday we tested it. And Monday still tacky, and we still got unfinished business here. Large stop line candle. Classic Nas. Could just be setting up for the next run because a lot of the Magnificent Seven is going to start reporting earnings. So it could just be like bumpy retracement to the summertime. We might, like, selling may go away. So that means we got a week left for buying. Mm-hmm. not as explosive as NASDAQ. I mean, as a NASDAQ person, over here, see. Mm, but NASDAQ is lighter. Only 100 stocks. Still going. It's a bigger ship. Mm, this low is actually created on a Thursday, so that's like low of the week S&T. Yeah, still created new highs. Still haven't hit an explosive number. Stay within the top quadrant, whereas Nasdaq played on the top of the quadrant or the top of the previous week's range. This one, SPX, only stayed in the top quadrant of previous week's range. Top previous week's range, where hold on, was in the upper quadrant of previous week's range. Stocks at all-time high. All the order block traders are just like, man, it's gonna take forever to come back down to the order block. You gotta become a fair value gap trader. Them order blocks is far too. You gotta come down here. Pretty much a rally base. That's all it did. It did hit the pre-market order block and just pumped. Pre-market order block was also in line with the inversion gap. Let's see what it looked like on QQQ. It said we didn't need no pre-market order block. We just ran. It did hit previous day's high. Overnight and pre-market just ran. This is closing price. We just opened here and just kept going. Gap and go. That's what they put in the books. Gap and go. Then I was looking for the TGIF. Tried to sell in here, got stopped out. TGIF. Took two. Yeah, let's stop for the day. Did the framework play out? No, I was looking for TGIF. Price. Rally. What did I learn about the pattern narrative myself? Careful around earnings season. Investor sentiment makes bull markets choppy. Yeah, that don't apply. Weak outlook. Yeah, sure. Just make it a literal question. I still gotta do Saturday for today and then tomorrow's weekly outlook. Welcome 1% of the day, right? Split it up. Okay. 26. Which models hit? Not a classic profile. Hold up. Control. I done hit something. This was kind of easy to read. I think I missed the sale though. Yeah, I did. I tried to get it. Tried to get it early. I tried to get it after Asia High. This is just a trend day. There's no raid here to even say. This is a good one. Monday, Tuesday, New York reversal. Wednesday was that earnings run up. Thursday was earnings. On the box, New York reversal. Daily profile. Hit FUGs. Missing. To choppiness. Is that a word? Choppy markets. FUGs are getting filled quick. Or completely left open. Identity, progress, patience, discipline, confidence. Good week, sticking to rules. Rules keep you in check. And making sure stats and profit factor are taken into account for metrics. Case study log. I need to do the bolo. I gotta do the bolo. Next week, I need to do the bolo. I'm looking at wigs. Using the gradient. Hold on. Case study log. No, I didn't do this. Yeah. I haven't did one of those in a minute. Spirits earned this week. There's a lot of gems I be getting from ICT, but be like mindset gems. Pull up PD array. And tune in to more of those trader roundups. Those are good for the spaces. Listen.com. Rinse and repeat. Stay focused. Let's get these power of 3 charts. Yeah, let's get all the drawings gone. This is a terrible power of 3. Accumulation, manipulation. Previous weeks, basically this week did like the break and retest. The simple old, we broke it here. These weeks, you could say, we just playing with it, but then we broke it here. That's basically what it looked like. And it's a Tuesday, low of the week profile. Tuesday, low of the week. Candle bodies, chest, break, and retest. Previous week's high. And here we didn't even break it to here. We just tested it. Which made it like everybody wanted to sell it. Like SPY ain't going. SPX held to Friday. That's how I knew we could open again to Friday. What were we gapping down for? It's like every week we gap for something Trump did, but if he done did so much stuff, you can't even keep up. It's like what was that? We've been bullish since that blockade though. Basically the same. Even that wig down looked like it was just playing a game. Okay, Q. Yeah, previous week's high. We broke it here. I might need to change the color of these lines so I can see them better. That was only no commentary. You looked at it. Well, I looked at it 4 different ways. Alright, that's that. Charts. No real takeaways here.